Welcome back to Reimagine 2020. I'm Yonah Hochhauser, and today I'm glad to be talking to Daniel Hwang, Head of Ecosystem Development at Terraform Labs. Daniel, thanks so much for joining me.
Glad to be here.
Well, first, give our viewers a little background on who you are and how you got into blockchain.
Sure. So I work at Terraform Labs. I'm the head of ecosystem development. And so I primarily support the four verticals of research, third-party development, ecosystem, and the validator ecosystem. My start into blockchain came with remittances in the Philippines around 2013. So I was actually a Dogecoin miner back then. And then we were trying to do stuff with sending monies between foreign domestic workers and back into the Philippines, but that was obviously a bit of a hurdle. And so I think like a big part of it was kind of like the breaking the barrier, the education barrier specifically. So obviously like we didn't have stuff like mouse belt back then, but it's really good to have some of that stuff now. Yeah.
Sure. And let's speak a little bit about Terraform Labs themselves and Terra Money. What separates Terra from all the others? I mean, you guys have obviously survived the bear markets and the cold winters dating back to the end of kind of 2017, but how does Terra differentiate itself from all the other cryptocurrencies?
Yeah, I guess there's a few things that are a bit unique about us. So Terra is a blockchain network that's it's built off of the Cosmos SDK. And so we are a proof of stake network. We use Tendermint, we are delegated proof of stake. What's interesting about us is we have native stablecoins in our network. So it's not just one stablecoin that's, let's say, fixed or pegged to the US dollar, but we have like a family of native stablecoins. So for example, we have like the US dollar stablecoin that's pegged to the US dollar, a Korean won, a Mongolian togrig, and one pegged to IMF's SDR. And we also have like kind of a native governance token, a staking token that is kind of collects the rewards and is used in a form of collateral to stabilize our stable coins. And it's algorithmically stabilized. So it's not over collateralized like you would see with MakerDAO. It's not kind of one-to-one where you have like a dollar lying somewhere like with Tether. But it's very simple, similar to how you would imagine kind of like how stabilization works within like the traditional monetary kind of economics with like a central bank would. And another, I guess, difference is that Terra, I guess, started with the perspective of having cryptocurrency used immediately. And so it really started with kind of like a product market fit approach. So, right, we don't have too many applications on Terra, but like the ones that have released have kind of achieved that sort of mass adoption pretty effectively. So we have, for example, the Chai payments app that was kind of built in-house and then kind of spun out and became its own thing. And Chai is a payments app that is currently in Korea. And I guess the narrative around that can be summed up with as like mass adoption through abstraction. So Chai is a payments app that is abstracts away some of the cryptocurrency and the technicals, and it's kind of puts it in the back end. And then what is exposed in the front end to users is just a seamless payment experience. And
so a user using Chai, they don't even care that it's blockchain. They're just saying, hey, this is a better, quicker, cheaper way for me to send payments, and it's just blockchain in the background.
Exactly. Yeah. And I can go a bit deeper into that as to why that I think that is important, and how that happens as well. But yeah, so sure. Chai's got, I think, around a little over 1.9 million active users. And these are just kind of active user accounts where there is activity like being used. And I think the total number of accounts that are active beyond Chai and within the whole Terra ecosystem is a little over 2 million. And so what's interesting about Chai is, right, it started with kind of like this e-commerce integration. So one of our founders, Daniel Shin, was one of the founders of one of the largest e-commerce companies in Korea called Tmon, Ticket Monster. And now he kind of runs Chai. And then our other founder, Do Kwon, runs Terra, like the Terraform Labs, like the research and development and stuff for the protocol. Is that, right, with Terra, we're not an inflation-based network, as you would see kind of with like POS, but like we are fee-based. So there is actual real-world value accrual through the transaction fees that come in through real-world transactions through the e-commerce integrations with Chai. And so I think, I don't know the exact numbers, but I think last I checked, it was a little over $5 million in transaction fees, total transaction fees accumulated, which puts us like third right behind Bitcoin and Ethereum. And that has a lot of impact in terms of like the valuation of like the stabilizing asset Luna, which is also the staking and governance token, as well as kind of the obvious and the native guarantees for network security, right? Especially in POS, proof of stake. And so
let's break that down a little bit. You mentioned the Luna staking token. How does that work? Is that just a standard proof of stake network? Yep. I want to break that down a little bit.
Yeah, exactly. Right. You can use the Luna token to stake on a validator. You use it to vote, and it also kind of is a part of the stabilization mechanism. And I'll probably go into that right now. So the way that you can also have value accrual is like, right, with fees, transaction fees come into the network, and then you get the Luna holders get rewarded as they delegate on validators. And so let's use the example of how some of the stabilization mechanism works, and then how the Luna token kind of Luna token holders, or like, I guess, networks participants get rewarded. So there's this concept of seigniorage that I'll get into first. So for example, let's say like the United States, we want to print like a US dollar. Like we want to print $1, it has a value of $1, but then it doesn't cost $1 to create that dollar, right? And so let's say it costs like a couple cents. And so when you print $1, you have kind of like this profit margin that like the government has, and that is called seigniorage. I don't know, let's say it costs like 3 cents to create $1, and then you have like 97 cents of profit. And that kind of flows into like whatever fiscal stimulus that you need in the government. Similarly with Terra, right? When you print a Terra stablecoin, let's say you print a US dollar pegged stablecoin, the UST, which we call it, it costs nothing to make it. And so there's like that pure profit of seigniorage. And then whenever that Terra is minted, the seigniorage flows into the network as well, into like, to the reward pool or community pool. And then basically the end result is like our Luna holders get rewarded. And specifically how our Luna holders also get rewarded beyond like the seigniorage that is flowing down as rewards into the system, as you get like these transaction fees that are coming from real world transactions happening in like e-commerce payments, is that whenever you want to mint a Terra stablecoin, you also burn Luna. And so there's like this deflationary pressure on Luna prices. And that's kind of like how I kind of describe there is like Luna is a form of collateral to these stablecoins. Mm-hmm. And the reason why this occurs and why there even is minting is based on like kind of like the supply and demand that you would see. So, right, let's say for example, you have a bunch of like Chai users, they want to go all buy a bunch of beers at the convenience store. And so there's going to be this demand for Terra stablecoins, let's say the Korean won stablecoin in this case. And there's going to be this kind of like, the price peg is going to deviate above it, right? The Korean won stablecoin is going to be in more demand. So like the value of it's going to increase. So we got to bring it back down. And that's kind of like where I said it was very similar to kind of like how like the traditional like kind of central banking might work, right? You need to print more to like deflate it to bring back to the peg. I mean, that's like kind of where like the seigniorage generation happens when you mint mint Terra to bring back the peg. So there's more supply, and then you also burn Luna. And so we call that like Luna burn.
So if you're trying to, I understand if you want to deflate it, de-inflate it. So of course you just print more, that adds more demand, more supply with the same amount of demand. So that's going to bring the equilibrium again. But how about the other end? If you need to start burning, whose coins are you burning? If everyone's holding the coins and now you need to burn them, where are these extra coins that you get to burn?
Yeah, so an important part of that is there's like this arbitrage aspect. So let's say, and it's basically the inverse, right? And it's like the system that takes the cost. So let's say like the peg goes higher, right? Like let's like a KRT, the Korean won peg stable coin is like kind of it's deviating above the peg. What we allow is kind of like these arbitrage mechanisms to happen. So what will the arbitragers, like it could be anyone, like it could be a user, or I guess like more savvy users who want to take advantage of these opportunities to kind of bring security and stability into the system, is that, right, the system will allow for you to get one stable coin, the one KRW, for the true value of it. So it's like you're getting it basically at a discount versus like the actual like the deviated peg, the higher value that it's trading at, and then you can go off and then you can trade it on exchange or sell it on exchange and stuff, and you would flood more stable coins into the market. And so it would go the same way on the opposite end. You have like this arbitrage that is being taken advantage of, and so I guess in a sense it's kind of like a lot of behavior for stabilization or even network security is all kind of incentivized, right? With like Bitcoin, you have like the incentivization to mine because you have that potential to like earn rewards or however many you get for like a fixed cost.
And you mentioned that the system's the one taking the loss. The system is the one either selling for below market value or above market value every time. So if the system is automatically always the one biting the bullet, so to say, to stabilize, what is replenishing the system's funds to then be able to further stabilize the network?
Yeah, so I would say like who's taking the impact is, right, Luna is basically the token that is the stabilizing asset. And so it is the one obviously that's experiencing like the price volatility due to that. And I would say like on the longer term, right, you have like these these guarantees that, right, you are getting like the block rewards that are pretty like regular and I guess predictable in a sense. And then over the longer term, you have like these staking opportunities. You have like the seniorship that gets generated. But yeah, it is true. It's very dependent on economic demand, right? So you want to continue to like bring in value into the network, and so, right, you need to have growth in terms of like your ecosystem, your applications that are using it. Specifically, what we've seen with Chai Pay, Chai, the finance app, we also have like Mimi Pay Mongolia, which is why we have like the Mongolian Togrig as a stable coin. Right. It's the growth of the network that continues to support it. Right. So that's something it's very important.
Right. And of course, to make these apps like Chai app and Mimi app useful, they have to be accepted at vendors. How if I go right now to Chai Pay is in South Korea?
Yes.
Yeah. So how many vendors are accepting it? Is it normal for me to be able to walk into the average supermarket and be able to buy my groceries using Chai Pay?
Yep. So this is actually interesting. So I'll talk about sort of the three parties that are involved. So we have like the Terra network, we have the user, and then we have merchants that are integrated. And then Chai is kind of like in the middle, right? Mm-hmm. So what happens is, right, I would say all parties benefit. So let's start with the users. So the users that use Chai, they get discounts when and this is specific to like a merchant that is integrated with Chai. Like the merchant will have like certain promotions that are running for a while, or just have like continuous promotions that are maybe running for a little longer. And then they also get cash back. And so these are like some of the draws that are beneficial for them for the Chai app. Like you can use like the Korean Venmo or PayPal or something like that maybe not give you discounts for certain merchants. And then there's like Chai that gives you discounts. So that's obviously like an immediate draw beyond just like the ease of use, like the UX, UI, right? Whatever someone prefers. And I think, as you mentioned, right, integrations. Can you use it anywhere, right? And I think maybe that's more of sort of like what we have experienced, let's say as like crypto natives and like the cryptocurrency ecosystem is like, that's like the biggest hurdle of like, yeah, we have to get integrated. Can we use it here? Can we use it here? Or we can't use it here. But that should honestly be like the default of what anyone expects out of like a payment experience, right? If I use like PayPal, I shouldn't try to look to see if like it's accepted at a merchant or like, you know, it should just be like the default. Like that's the default for all payment options. And that's kind of like what is happening with traditional and should happen with crypto. And we've done it with crypto in Korea. So the users benefit, they get discounts and cash back. And then there's like these incentivizations mechanisms and reasons why these discounts are beneficial, not just for users, but for the network, because you have like, for example, cashback. You get cash back through top-ups, right? Kind of like use it as like a debit card. Like you connect your bank account, you top up, and you fill your Chai payments app with like, let's say like $500, and that is reflected in stablecoin in the back end, not necessarily to the user. And then you have like an existing circulating supply of the stablecoins that is beneficial to the network, and I'll get a bit into that. And so on the merchant side, right, you have merchants who are kind of integrating with Chai and these as an additional payment rail beyond like the traditional payment options that they provide, right? With like Visa or MasterCard or other POS systems. And what the big difference is, and I think that everyone in the space, I guess, has known for a while, for specific payments, cryptocurrencies use as payments. Like obviously like we have fees and transaction fees on Bitcoin or Ethereum that are kind of like widely inflated, but or high, but right. Traditional payment processors in Korea right now charge from around like 2.3 to 2.7, or even as high as like 3% on those fees. So maybe that's just like the standard in the traditional space. But right, when you get into like blockchains, you have the scalability assurances, right, that you get with like proof of stake and Tendermint. Right now, for example, with Tendermint and Cosmos SDK, you get like, you know, 10 to 14,000 TPS max with like 250 bytes of data, right? So we have like 0.6%, right? And that's something that is like undeniably valuable for these merchants. And then that's something that they're ecstatic of. And just to kind of show you how excited they are, right? There's a lot of like the technical management that is done on behalf of the merchants as well for Chai, through Chai, which is also like a big benefit to like how the integrations have been working out and sort of like the contracts that go there. And also like the flexibility of settlement times as well, right? So like 6 seconds per block, but then you can also have like batch settlement, however long the merchant wants to settle with. And again, there's like the idea of like kind of like existing circulating supply of stablecoins that is beneficial to the Terra network, and then kind of reflects in sort of like the contracts the merchants have with Chai and when they want to settle and how much they want to settle for and like how they batch those. So the merchants they love it, right? And that's kind of like how they also are, you know, they often kind of do promotions on their own. Like sometimes Chai doesn't even have to do all this marketing. It's like the merchants that are doing a lot of the marketing for Chai. And then, so for example, like I think when like the largest convenience store in Korea first integrated with Chai, they had this huge campaign where literally you're getting like 50% cash back. It was pretty insane, right? You spend $10, you get $5 back. And right, that obviously attracted a lot of people there. And finally, for the merchant side, yeah, you can use it anywhere, basically anywhere. Like the top 14 banks are integrated with Chai. You can use on like the largest bookstore, the largest gaming like companies, like the number one gaming company, the number one convenience stores, the largest e-commerce stores, the large online travel agencies, et cetera, et cetera. And I guess like maybe I can like list all these out. Maybe you might not know some of these, like large movie theaters, but like the GMV, it's like around $25 billion, right? And then, right, some of these merchants that we've integrated with, especially like Interpark, like literally has like half the Korean population, right? Like the Korean population is like 53 million. And then, right, you have like the user base and the access that the users can have is quite high.
And like you said, this is crucial for a payment system that it should be integrated. It should be there. You know, I shouldn't have to worry, does this merchant accept it? So how is Chai
Exactly. That's
able
default.
to achieve this? If, you know, this is the dream. This is the crypto dream where I could take my crypto and I could spend it at any place. How come Chai was able to do it so successfully in South Korea? Is that reflected more on Chai, more on South Korea? How did that come to be?
I would say it's both. I think like the Chai team can answer that a little bit better, but right, obviously like one of the founders he was a successful e-commerce founder, and so he knew that space pretty well, and then he knew how to get started with integrations. But yeah, I would say it's both. Right, the regulation in Korea is obviously a lot more permissive than you would see in like America, so that exists. Existing kind of like knowing how the system works. Also, like the merchants that showing value proposition through for the merchants is important, and obviously like the transaction fees is something that you can't ignore, right? And so I would say it's all of the above, and obviously I think the narrative also there is not just like the merchant integrations, because I think that is kind of like a no-brainer for any kind of like business that can kind of use it effectively. It's also like the adoption from the users, right? You can have all the merchants you want integrated, but like if you don't have users, that's something that that you need to get over. And I can talk a little bit about that after I finish up like the third winner here, which is obviously the network. And so, right, I mentioned briefly that, right, our network is not inflation based, but it's like fee based, and that's kind of like very dependent on like the scaling of the economy, which we have definitely seen within like the year that this has been live. And so, right, there's actual real world value accrual into the Terra network through these e-commerce transactions that are like legitimate, right? Right. In fee-based networks, you can kind of like spoof it, right? You can just like send transactions back and forth to the network, and then it's like, hey, we have like all these transaction fees, but this is actually real-world value accrual. And so the Terra network wins, right? All this volume is coming in, fees, seniorage based on demand. You have rewards that come in. You have like the Luna stakeholders that benefit. Whenever you mint stable coins, you have like a deflationary pressure on the Luna stablecoin. The Luna token, right, which is burned, and so right, all three parties win there, and so I guess you could think of it, it's like a virtuous cycle in that sense. And so to touch upon like kind of like that narrative, like mass adoption through abstraction, which has been quite successful with Chai, is right. We eventually, I think, or to take a step back from that, right. Like I guess I've kind of experienced firsthand like the difficulties of kind of ram a fire hose down someone's throat to like introduce someone into cryptocurrency, right? There's so many things that people need to know. Like you have to, and there's obviously like there's opinions that I have that I think people should know, right? And it varies, right, based on like your ideology, right? But there's like the concepts of like self-sovereignty, like private key management, like decentralization, why that matters, why I should get into it. And right, not all of us are like engineers who understand like all the intricacies of how this works, but there are certain like important parts if you want to adopt those principles and have those kind of like guarantees, right? There's a whole concept of like be your own bank sort of thing, right? You're not limited to like what we have in like the traditional financial ecosystem or infrastructure that exists. So, and we've seen that, and it's been like what, at least when I started, like it's been 7 or more years that like there was kind of like a build it and they will come mentality. Like there hasn't been that quite as much adoption, and it's kind of like, right, of the crypto natives, all the layer ones are kind of like fighting over the same small group of people, which is nice because like competition will like allow the participants to kind of evolve and become much leaner, better, more efficient. But then there's also kind of like this whole other world that I think a lot of us may have had some difficulties bringing in, right? We need these bridges to bring like the non-crypto natives, right? And that's kind of like what approach like Chai has taken, right? Mass adoption through abstraction. You get these people onboarded first. maybe you don't like ram a fire hose down their throat. Maybe you like kind of give them like cups of water, right? Get them onto the platform using it. They see the benefits of like what Chai is doing, right? Obviously, like there's like tangible benefits like cashback and discounts that are able to be funded by Chai through like seniorage rewards, and also as well as like the money they raise, right? As you would imagine with like traditional startups that are being bootstrapped, right? Like Uber was operating at a loss, and then it kind of hits like a critical mass, and then it can do and monetize on that in terms of like profit and revenue. But right, yeah, get them onto the platform. The platform becomes sticky, and then you can start imagining that this gradual, like giving them more cups of water, right, so to speak, right, instead of like, right, there's the same amount of water that you would try to ram someone down someone's throat with a fire hose, but then you just do it over time. And so you can kind of start walking people down this bridge, right? And then that's kind of like what I think really resonated with me when I joined Terra, and what they were doing was, right, it's very refreshing to finally get adoption in a sense. I won't lie and say like many of us, me included, are pretty exhausted with kind of the lack of adoption that we've seen with being able to get like the rest of the world into it. Yes, we can like, there are going to be special groups of people who are deeply into like decentralization, self-sovereignty. And that's maybe just like a factor of like where you live, right? First world, third world, there's certain things, maybe like even in the first world, people have like more privacy minded or maybe distrusting of like centralized entities. But yeah, you start walking them down, and then you can introduce more applications. For example, another product that is being built in-house and going to be spun out soon is as its own entity, as we did with Chai, obviously in the favor of more decentralization, and introducing that into the ecosystem is a product called Anchor. And so you can find out more at anchorprotocol.com, but it's very simple to compound. It's like a savings product. And that is a bit more decentralized in its scope, right? And so it can benefit like with the Chai users, where it can be used as a savings account, and you get yields that can kind of be directed back into the Chai app. And you kind of have like another sort of like microcosm of like these circular virtual cycles and loops of like how the money kind of flows in that sense. And you walk them down, right? Stickiness, adoption, and then more applications come in. And then you have like these spectrum of decentralizations that you will eventually go through. And then that's, I think, a really solid way of kind of bridging the gap between, I guess you could say like CFi to DeFi, right? But you need to get them in, right? You can't just kind of like be looking inward and then expecting people to like learn on themselves. And if you can't figure it out, oh, too bad, right? And there's always going to exist, I think, in the world, like classes of different types of understanding that people have, right? Maybe my grandma I can teach my grandma how to like what the point of like self-sovereignty is, or like what private keys are, or maybe I have to teach her how to like use a computer first, that sort of thing, right? But yeah, that's the ideal world. Everyone knows, right? And that would be the future of open finance and the financial infrastructure that everything is run on. But before we get there, we need ways that are a bit more gradual. And so, yeah, I think that's like one of the most powerful narratives that I've seen, and that I'm excited to continue to build and really get the rest of the world in. Right.
Well, and I think it's really interesting because what we've seen so far from stablecoins is there's kind of a couple of ways of looking at specifically stablecoins, where, is it being used, merely as, as a fiat substitute, where, if in a country, let's say, if you're in Argentina or Venezuela and your local currency is hyperinflation, so I'm going to go move over to, a different stablecoin that's going to actually maintain its value where I'm living. There's the stablecoin use where, hey, it's just a fiat on-ramp. It's easy to get fiat on-ramp and off-ramp. Maybe if, Bitcoin's going a little wild that week, I'm going to move over to stablecoin, to kind of maintain its value. And then kind of what you guys are doing also with transactions, where I know it's a great way of purchasing things, and I know how much it's going to cost me. Maybe, maybe Bitcoin might, I might cost a TV 1 Bitcoin today. It might cost 2 Bitcoins or half a Bitcoin tomorrow. So I think it's kind of interesting where you guys are at, where you're kind of hitting all those points where, like you mentioned, hey, let's not worry, about the high level. Let's give them something to use it for. Let's let them be transactional. They can come here, they can use it to purchase, and it's going to be maintaining the value. It's pegged to their local currency, so they don't have to learn a kind of a new value. It costs the same amount that they're used to, and I think that's very important.
I could talk a little bit about like why a family of stablecoins exists, but sorry, continue your point. Sorry.
Well, take it away. I was merely, kind of highlighting that. I kind of like the approach that I'm seeing for you guys, where you're kind of hitting all these points. I've seen a lot of projects kind of, like you mentioned, just kind of ramming it down people's throats. And instead of saying, it's very easy, as a crypto native, to see the wonders, the beauty, the light of crypto and try to say, oh, no, don't you understand? This is why it's so good. But instead, you're kind of speaking their language. You're showing them in a very easy way how it doesn't, like you mentioned, they don't even need to know this blockchain going on. But once they're using it, it kind of slides it. Go, take it away. Yeah.
Just to like complete like your thought there. I completely agree. I will admit, like I used to be, and I came from like obviously like the Dogecoin, and then I did a lot of stuff in Ethereum. I was doing like development with there. I was trying to build stuff there. I had received like a 0x grant to build like decentralized exchanges that were localized to different countries. And then, right, there's that true like idea of like, please understand the value. Like, I want you to understand the value, but like, there's certain places in the world that may not be as kind of receptive, or they just frankly don't care. Right. And my first world countries, for example, and I was building like a decentralized exchange using the 0x protocol, and they had thankfully given me some grant money to build some stuff. It's like people in creative they didn't necessarily care as much, right? And so that turned into like kind of like a educational onboarding service where, okay, if you don't care to use a service, like I'll teach you why you should care. And then that also like kind of, right, different cultures have different ways of learning, and that was like a fantastic experience. And I've been interested in the kind of like the educational space for a while. The reason why I was in the Philippines was I had built this kind of like educational computer lab as like a substitute for schools for people who couldn't like afford that. And so that kind of transitioned to me like getting to know the families and then helping them with the remittances and like, oh, you can use Bitcoin and Dogecoin and like, and that stuff. But yeah, I completely understand. I completely agree. Right. But like, yeah, let's talk about like the value and then the reason why like a family of stablecoins exists. And it's not just limited to the stablecoins that we have right now, but that more stablecoins can be, pairs can be like minted, not pairs, like stablecoin types, or more pegs can be created, right? Depending on like it's just like community governance vote on the network side, the technical side, and then it's just like creating the appropriate on-ramps in like those different regions. So yes, as you mentioned, right, there's like, I guess, two things. Obviously like the stablecoin argument is that, right, we all know that joke of like, oh, like Bobby, like, it's great that you have like, $100 worth of Bitcoin. And then he says like, oh no, it's like $87 worth now. It's like, oh no, it's like $127 now. Right. Mm-hmm. Yeah. It fluctuates in value. And so like, you need immediate usability, and that's why a stable coin is important, but also is that like the value between, right, this is like not just like a regional kind of like thing, right? All these blockchain networks are supposed to be global in nature. There's no concept like borders, but in the immediate meantime, it's like there is. And right, I would say like all stable coins are in a sense all pegged to the US dollar in a form, right? Like, and there's a good reason for that, because that is like the most recognized, like the world currency, right? Like who knows what people may know what the IMF SDR is if you are like an economist or do like global economics, and right, that is like it's supposed to be some sort of world reserve currency. Yeah, I mean, like the regular person doesn't know, like, like someone like a foreign domestic worker knows what a US dollar is and what it's worth. But yeah, the value, right? And right, that comes into like the sorts of like value arbitrage that exists between countries. Like a dollar might be worth something in America versus a dollar might be worth something extravagantly more in Venezuela, or something less in like Europe, or right, or more in Korea and stuff. And then there definitely is a disconnect with especially how easy to use the type of currency is. And so with the family of stablecoins that we have within Terra, like we offer like native on-chain swaps. So like you can swap between a KRT, the Korean peg stablecoin, and then the UST, the US dollars peg stablecoin, right? Very efficiently. And also you can swap between like any of those stablecoins and Luna also, for example, on-chain. And so you can imagine, like, maybe this is a topic for a different discussion, but like you can imagine like FX exchanges are very natural manifestations of like what you can do with this technology. And it's something that like we haven't seen yet, but we hope to see, or maybe it's just going to be natural when people start building on it once we have smart contracts that will launch in about a month after, if the governance proposals pass for our next mainnet update. And I could talk about a little bit about that a little later, but yes, so there's like this value. The value means something very different to different people. So I'll illustrate this like with an example. So let's say like there's like a K-pop store in Korea that is selling like BTS sweaters, right? And so, right, someone in Korea can like purchase that BTS sweater for Korean won, right? So there's like a specific Korean won version, and then maybe it's like a fair price, right? But then let's say this K-pop store also wants to sell their BTS sweater. For those of you who know, it's like a popular Korean boy band, but like,
who doesn't know BTS? Come on, how ignorant do you think I am here?
Who knows? But like, someone in America wants to buy it, right? And they expose their store to American users, and so they're like, they can see it's like, oh, hey, there's like, maybe BTS has that K-pop store has the prices only in Korean won. And so immediately when I see that, there's like a barrier. Like, okay, what does that cost to me? Is it a fair price? Maybe like I'm incentivized for other reasons to buy it regardless of the price. But like, right, I need to do like the exchange. I need to do the currency exchange. I need to like factor that. And there's already immediate barriers between those, like the native buying process. So like you can also reflect in US dollar, and that's like, you know, something that the merchant, the store can do. Same with like if like the BTS sweater is being offered in Venezuela or China or Japan or India, for example. But those can all be reflected in like the different denominations, right? And then you could pay for those with your different denominated stable coins. Like if I'm an American, I have US dollar stable coins, I could pay in US dollar stable coins. If I'm in India, I can play with INR based stable coins, or in Mongolia with a Mongolian Togrik. Right, that's a seamless experience for me, and that's kind of like the value that I attribute to, and makes it my money a lot easier to spend, right? And then now we get to the stage where like the merchants, right? The merchants, right, can choose to kind of accept all this money in like different denominations. Maybe they prefer to do that, but that's highly inefficient. They just prefer to settle their stable coins into like, let's say, fiat later in all their denomination, right? And so that's where like the native on-chain swaps exist. So you have like the value understanding for different people globally, just regionally. Like the world doesn't have a single world currency. Maybe it will exist in, who knows, maybe like it'll be Bitcoin or something, or just something pegged onto Bitcoin or something like that. But yeah, there exists like these barriers to entry that people have in terms of like understanding with different denominations of currency. And then you can facilitate that for merchants and users who are accepting these stablecoin transactions with on-chain swaps. So you can immediately swap them all into your native currency and then choose to settle in it and do what you need. And so I think that's an extremely powerful feature that warrants the different types of stablecoins. And I would say, not to say like US dollar-backed stablecoins are not important, and there definitely is value there, or maybe it's just like it's existed to exist, but then there can be a bit more that is done, that is done just both in usability and features. I mean, for example, like we see like USDT being the most popular form of sending money back from like Russia to China through Chinese foreign domestic workers in Russia. And that, you know, there's a lot of obviously like psychological factors there of like why they use USDT, just like because someone else they know uses USDT and they know how to do that. but then, right, that also affects, right, like these barriers that we need to kind of lower for people to kind of access and immediately start using, feel comfortable, and then start exploring more and more of.
Mm-hmm. Well, you
And so,
said
yeah,
so.
that's, yeah.
Yeah.
Go ahead.
So let me just cut you off real quick. So we've kind of highlighted that it's been very successful with TriPay in Korea and MiMiPay. Where was that? In the Philippines? Where was MiMiPay?
Mongolia, yeah.
Mongolia. So kind of when you guys are looking, to expand, you're always looking for adoption. Like I said, adoption is the big thing. What's the next country, geographical location, or use case? Where are you guys looking next to really expand upon your user base?
Yeah, I would say like Chai, they have definitely their roadmap. I communicate with them often. Obviously, like, they say like what they're doing, and then I try to help them on certain fronts with, let's say, like exposure and stuff like that. But I believe that they are definitely interested in like the Southeast Asian region, specifically with like these e-commerce alliances that they've created, and also they're definitely strategic interest there with the growth that has been seen with e-commerce and kind of like the mobile native populations. I know Chai has kind of hired, I think, like the former like global expansion head for Uber, and I know they have like a great team focused on expansion there.
But how about the Terra network itself? What you hope to get as many big successes like Chai as possible. Is that the goal? Is you guys trying to kind of build or emulate the success by doing similar types of projects on the network in other locations, or kind of what's the goal for Terra network to kind
that'd be
of
great.
raise these kids?
I would love to see more Chais in the world. That obviously comes with sort of like how permissive certain regulatory environments are, right? For example, right, maybe Chai goes and like dominates Southeast Asia, but I would love to see like a Chai in Southeast Asia, not Chai, but like a payment option that uses Terra. Maybe it might be different. I know that there are some projects that are like very interested in remittances, and then those are like obviously like a little easier for me to feel closer to, because that's kind of how I started. But I can't play favorites, right? I can support them, but yeah, it's so I think the question that you're probably also, another way to answer that is, right, there are expansion efforts that we want, right? It's global, but we can't do everything at the same time. So we have like campaigns in China, India, and Japan right now, obviously with what we've been doing in Korea. And there's obviously like different user populations that exist specific to those regions that we are also interested in, as well as kind of like the organic growth that has happened from those regions as well, right? Like the Indian population region is like extremely like developer friendly. They are very familiar with like kind of like the native products that exist. There's also like a very vibrant like Cosmos community in India. And so we are based on the Cosmos SDK. And then also there's kind of like the technology that we are kind of familiar with and interested in kind of exposing our potential developers to as well. So I briefly mentioned it, but like we did not have smart contracts. We will be introducing smart contracts once these governance proposals, if they do pass in October, the beginning of October, where it's like this COSM-WASM smart contract. So COSM-WASM smart contracts is built by the team by Confio that is very native to like the Cosmos ecosystem. And then what they do is you can have like these smart contracts be also run on different Cosmos SDK based chains. And so there's like kind of like that native interoperability that exists. It's Rust and it integrates with our WASM module, and you get like the efficiency, scalability. The way that the language is written also kind of addresses a lot of like the issues that we kind of see with Solidity that I've been pretty familiar with, right? I think a lot of people are very familiar with kind of some of the language barriers or features, I would say, or like reentrancy attacks, et cetera, et cetera. So
do you see once if governance does vote to implement smart contracts onto Terra, would you predict or would you hope for an explosion of DeFi applications on Terra?
Yeah, I would love that, right? I would love some sort of like Cambrian explosion. And that's kind of like why we started some of these campaigns, like these specific regions. And obviously like they're somewhat close in our regions. Yes, that's what I would love. Obviously, the way Chai was started was like kind of we saw this product market fit that can happen, that has been achieved, and so that kind of like we supported that, as well as like Anchor, right? That was like a very and that maybe kind of goes into discussions of right, like the way that you approach certain like projects, or like what types of applications can exist on your network. So, right, there's obviously networks that are like, okay, we're a gaming platform, right? That you would see, or an NFT platform, like what you saw with Flow, with Dapper Labs, and right, and then like this network is like primarily focused towards like supply chain, but like they are all more or less truly generalizable networks, right? They just have like a flavor of different applications, and I would say that what it looks like right now is right completely dependent on like what the community builds. And from now it's been like financial applications and open financial infrastructure. We have payments, we have Anchor, which is savings. And I can go a little bit into Anchor a bit there, but like you can see like you can see them like these kind of like moving in the network. And then you can see like a smaller ecosystem of like applications that maybe support those services as well. But right, who knows, maybe there's going to be like this hit of like someone creates a gaming application on Terra, and then that's what people recognize as Terra or something like that. But right. Chai's payments, we have Anchor, which is savings. And then there's obviously like a third part of like what exists in this financial ecosystem is like capital markets too, right? And so all those three spheres of influence in terms of the applications that can be built they all like kind of feed into each other, right? And to describe a little bit more about Anchor, like high level TLDR of how it works is that it is, I think, it is built on Terra, but is, I think, one of the first like true interchain applications. And what I mean by interchain applications is that you obviously have like interoperability networks like Cosmos, right? You have a network of chains that exist. You have a network of chains that exist in like Polkadot with like the pair chains and their threads and stuff. But like with what Anchor does is that you deposit Terra stablecoins, and then portions of those stablecoins go off and take staking positions in different proof of stake networks. And the yield that is generated for your savings is from block rewards on those networks. And so that like gives you predictability in terms of like the yield you get. You get a relatively high yield depending on the Anchor savings rate that is calculated, and from those block rewards, as well as kind of like these guarantees that have been built with a lot of like effort from our research teams for like liquidations, and then as well as this concept called like liquid staking derivatives that give you an opportunity to leverage staked assets in these different networks to provide this yield. And I think that that's also another fascinating conversation that can be done with what staking derivatives can represent, especially in proof of stake networks, into the ecosystem of applications that can be created. And I'm actually really excited about that, especially within the validator ecosystem and proof of stake. And I think there's like a huge market for what can come with staking derivatives. And maybe it's like a form of like what we see in the traditional markets, how much more efficient and flexible we can be to have those certain products like in the borrowing and lending. And I think the DeFi space that we have in general. But I can go on for like hours, like that.
We're running out of time, so I want to give you three rapid fire questions because you mentioned staking and DeFi. First question: Will Ethereum?
Could I quickly answer? Could I quickly address one last thing? The point that you made. So as you said, like DeFi can exist on Terra, but I think it's very important to be able to be interoperable and also be exposed in like the Ethereum DeFi ecosystem as well. Mm-hmm. And I think we are definitely focused on building bridges there to have like Terra assets in as collateral or integrated into those different types of products, because we need to be like interoperable and workable there. Sorry.
No, it's okay.
I just wanted to squeeze in that point.
That fits in well with my next three questions. Yes or no? Will Ethereum 2.0 come out this year?
No.
No. All right.
The testnet came out, right?
No. Or will we see mainnet? Yes or no?
Yeah, I don't think so.
No, I don't think so.
I am a huge Ethereum fan. I still consider myself a part of the Ethereum ecosystem. I use all the apps, and I obviously like hold Ethereum, and that's where I cut my teeth on in development for blockchain development. But yeah, it's
no mainnet this year.
Probably not.
Describe DeFi in one word.
Anything in cryptocurrency is DeFi. I'll clarify that a bit. I'll clarify that a bit, but honestly, like narratives are important, I think, in cryptocurrency, and just like fixating on them, just as memes are important in communicating a narrative, like idea very efficiently. Like there's flavors of DeFi, I believe, like what right now we have with yield farming and kind of liquidity mining and stuff like that is DeFi in a sense. But DeFi is decentralized finance, right? It's not like degen finance, like, or maybe people think it's degen finance, but like payments, like Bitcoin is DeFi, right? It's like you're able to, it's like a decentralized form of payments, right? I think it's peer to peer.
It's peer to peer, and not, you know, we could argue.
Yes. Okay. So let's say Ethereum. Ethereum is decentralized finance and the applications that you could build off of that, or even like what you can build off of, like the stuff that you can build on peer-to-peer networks is DeFi. But it's just like how people, like I studied cryptography in grad school, and it's like people always complained, the cryptographers, is like crypto is cryptography, not cryptocurrency, right? But then everyone is shouting crypto as cryptocurrency, and right, there's obviously like and so I think it's very similar to that, right? I think like DeFi is cryptocurrency from the get-go, but then you could also use DeFi as like what we see now, and it's just like a very good way of kind of quickly explaining a narrative or what's going on, just as like maybe cryptocurrency is a mouthful, and so crypto is easier, even though crypto means something different to cryptographers.
So I'll give you two words that are very easy to say, and if you said them to someone on the street, they would think one thing, but if you said it to a crypto native like you and me, they'd say it means something else. So you got to pick sushi or yam.
Wow, this is very political. This is a hard question.
Pick one, quick, pick one, and then we got to wrap this up. Pick one, sushi or yam. You could say neither, or you could say neither, by the way.
Yeah, well, okay, I'll say sushi with a clarification. I think what sushi has done is very interesting in the fact that it's kind of accelerated the pace of different types of development, governance, and technical infrastructure that has been built. I am like a huge fan of Uniswap, and I've used it from like day one, and I'm a huge fan of like the guys there, especially some of the people I know personally. But yeah, sushi was an extremely interesting experiment that, or maybe it'll completely do very well, right? What FTX is doing with Serum, and we've obviously are very close with Solana because we were building these bridges with Solana, is that, but Yam, it kind of like Yam 1.0, something happened with that, right? It went, and then now there's like a Yam version 2, I think, but maybe it was like a question of sushi versus Uniswap, but maybe that was too politically charged. But yeah, it's interesting, right? Like the fair launches are extremely important, I think. Although there exists like a case for like fair launch versus like, you know, pre-mines, which are also very important to supporting a developer ecosystem, right? Like you see with Zcash and the Founders Fund, and like how that goes over time. And
we're running out of time, so I'll cut you off there. But listen, Facebook, one of the most valuable companies in the world, it's essentially a pre-mine. You know, Mark Zuckerberg founded it, and therefore when he starts it, he gets the vast majority of ownership. And such is the way it works. So I think there's an argument to be made for both sides, but we'll have to wait for the argument for next time. Daniel, thank you so much. Sorry we ran out of time, but thank you so much for joining us here at REIMAGINE 2020. For all of our viewers at home, I'm Yonah Hochhauser. Thanks for watching.